That was very, very humble. Well, hello everyone. I will start to say, and I've spoken here a few times, just how incredible Christina has put on. I remember moving to LA in 2014 and coming to this event and meeting Christina for the first time and having the opportunity to come back and speak and share a little bit about my story and what I've built over the last 8 or 9 years is really humbling. So thank you very much for having me back. And hello everyone online. Hopefully you can hear me with this mask on. Can everyone hear me there? We'll assume yes.
Yeah.
We'll assume yes. Okay. Thumbs up. Fantastic. So I've given this presentation a few times. I will say this is a watered down version. This presentation usually takes a day. It's a day course, but I boiled it down to hopefully about a 35 to 40 minute presentation, and we'll have Q&A at the end. But what I'm really going to talk more about is the idea of raising capital. So Christina asked earlier, who would like to have more access to capital? Put your hand up. If you don't have enough capital right now, I will say that I started with very little capital. I came to this country, I think I had $40,000 saved up, and I had no network, I had no experience, I didn't even know what a credit score was. But I moved here to really be an expat and live in New York City and chase a girl. That was what I came to that's what I came to the US for. She's now my wife, so it all worked out. So we're happy endings. But honestly, I really just moved here to be an expat, to be an engineer. Come here as a pretty awesome visa for Australians, and that was it. I had already been bitten by the real estate bug prior to moving to the US, but when I first moved here, these events were what fueled my growth. These events don't exist in Australia on the scale that you have here. We have the Phoebes, we have the RIAs. I remember going to the New York RIA in 2012, 2 weeks after fresh moving to New York City, and being surrounded by 200-300 people all talking about real estate investing. So it is true that partnerships come from these events. You have to come to these grassroots events. Without them, you don't get started. And this is truly where it starts, where it started for me. I didn't get my first $38,000 property done unless I went to that first event. That $38,000 property was my first deal. I'm now doing $100 million deals today. Again, I don't say that to boast. I say that to inspire you guys because I've come here, I've got a little bit of different perspective on it, but if an Aussie can move halfway across the world and achieve what I'm trying to continue to achieve, then so can you guys. So tonight we are going, and is it down? Do this. There we go. Okay. So I've written a couple of books, and for those people who can get their hands on it, I should have bought some tonight, and I was running around in the rain. I'm actually leaving for Australia for the first time tomorrow, and I'm going home for the first time in 2.5 years to see family. So I do have a ton of books sitting at home. If you want a copy, I'll mail you a copy. But it's 10,000 Miles to the American Dream. I wrote this book with 6 other awesome Australians. We all got a chapter in the book. We've all come to this country and created real estate businesses in different facets. Some guys are in mobile home parks, some guys are in tech, and we've all written a chapter. And my chapter in this book is about the art and science of raising capital like a pro. My 6P formula that I've created over the years, observing other people and how they've created businesses. And not only is it applicable to real estate, but it's applicable to really any business. And I'm an engineer, so I like to break it down into its formula and put it into something that's really tangible for people to go out and take action. So it's in the book. You can get a free copy of it. And for those people online, you can also just email me and I'll give you all the contact details at the end. So again, I've got about $500 million of assets under management. I've started 2 syndication companies. I've got a podcast. I'm a structural engineer. But the most important thing is the last one. I'm an all-round good bloke. I'm down to earth. I'm approachable. I try and keep my feet on the ground at all times. And I really do genuinely want to give back and share and try and inspire some people to take some action. So again, thank you guys for having me here tonight. But we're going to get into, I was going to show you my first couple of properties. So that was the first property up here was the $38,000 triplex in Syracuse, New York. I flipped a house in Philly. It was a row house. Disaster. Both of them were disasters, but I kept going. I had a drive-by shooting at the first one. I was a fresh-faced, bushy-eyed tailed Australian learning about Section 8 housing. It was fantastic for 6 months, and then it wasn't. but it got me started. And the story is that I don't get to deal number 10 without doing deal number 1. And that's so important. And I could only afford $38,000 at the time. No one was lending to me. That's where I started. I'm now syndicating big deals and growing a portfolio, but it can start from as simple as an idea to try and create financial freedom. And for myself, my why was to quit the day job. And I've successfully done that, and now I've started a company. So again, trying to inspire people to take action and show a little bit of the story along the way. So what we're going to cover tonight, we're going to cover real estate syndication. And hands up people who don't know what real estate syndication is. Well, good. Okay, we can skip that and we can go straight to the good stuff. We're going to talk about why you need capital to grow and other people's money. And through that, we're going to talk about how to start raising private capital. And that's really about around this brand that I've built called the 6P rule. And it's 6 Ps that everyone uses. And I've observed in other people, not only in real estate, but in other businesses, starting from scratch and building a brand around what they're trying to do, which ultimately becomes yourself. We're going to talk about how we find other people, developing your brand, your KPI status. You're going to hear me talk about that a lot tonight. Key person of influence. You're all a key person of influence today. You just need to understand that. And we're going to talk about how you extract that from yourself and then use that and give you confidence to go out and start talking to other people about what you're trying to build. We're also going to talk about how to scale your business. And I'm going to give you some tools to be successful because, again, I'm all about sharing the knowledge. And I'm Australian and I'm down to earth, so it can be very approachable. A bit of a disclaimer, I have to say that because it's been recorded. So the power of syndication, as most people here know, is the power to use other people's money. Who has actually actively used other people's money in a deal today? That's fantastic. So you know the power of what you're doing. My first ever deal, the flip that I did in Philadelphia, I used my dad's money from Australia. I think he gave me a $50,000 sort of private money loan. Ultimately, that deal didn't go very well, and I had to dip into my own pocket to pay him back and give him a decent return. I lost money in that deal, but I didn't lose my shirt. And the reason I tell you that story is that, again, that was only my second or third deal in, but I was still doing it. I was still actively knowing what I had to do. I had a fiduciary responsibility to my dad to make sure he came out whole. But I was using his money to help me build long-term wealth. Even though I had some stumbling blocks along the way, I learnt from that. And the first act of raising capital, I share a story like that with you to say that it's not all roses and everything's going to go well. Things can happen. I'm not going to get into the details of what happened on that deal, but when you're starting to raise money from other people, it's very, very powerful because it can help you scale your business. It can help you grow other people's money, but also you have to treat it better than you treat your own money. And that's really, really important while you're trying to build a syndication business to long-term wealth. Oh, it's not working. Do that. So the ultimate reason why we use real estate syndication is a leverage, right? It is a partnership between a business owner, which happens to be you guys here tonight. We all have real estate businesses. We all have abilities to find great real estate. And you're partnering with investors who don't have the time or the energy to go out and find the deals that you're finding. They want to partner with you. There's a lot of people out there, there's a lot of capital out there who don't know where to start. They're scared, but they want to get involved in real estate. They want to place money in good deals. You can be a provider of those good deals. And so what it really ultimately comes down to is an ultimate leverage. The business owner leveraging capital, investors leveraging the business owner to form a really good relationship. And again, if anyone's got questions at home, please ask online. So access to more capital means you can access more deals, means you can scale your business. If I gave you ultimate blank check, how many people would go out and do a ton of deals, excuse my language, tomorrow, yeah? If you had access to that, right? That's what we're all striving to do, is build a scalable business. And the way you scale your business is through building trust and transparency, and we're going to get into that here in a minute. I'm actually going to get into it now. So when I first started in real estate, when I first met Christina, I thought about the fear of asking people for money into a deal. It's a fearful thing. It's a mindset. I don't know how to approach people. I don't know where to start. Why would someone trust me? I don't have any experience. I've just moved to this country. Who the hell would invest in my deals? Raise your hand if you have those sort of, imposter monster syndrome thoughts in your head all the time, right? We all have all that when we get started. We don't know where to start. We don't know, we're not good enough, all that sort of stuff. And so for me, it's about, I think if you keep going, it should be, Oh. So it is about changing your mindset, because access to capital and syndication and growing your business is about opening up a spigot that will be the ultimate spigot that sometimes you won't be able to turn off once you get it up and running. And I'm a product of that. I've been able to create a syndication business where I have a constant flow of capital to fund my deals. Now, it wasn't always like that, and I still constantly strive to make my business even better and more efficient and raise more capital, but I kept to go doing bigger and bigger deals. So the more access to capital you have, the more deals you do, the bigger your real estate business becomes. But where does it all start? Well, the same questions. How do I start raising capital? I don't have any credibility. Where do I even start to do that? How do I stand out to attract capital? Because so many people are out there raising capital these days. And then how do I use it to scale up? All these questions I have for myself when I first got started, and I'm sure half of you in the room and online at home have the same questions about how you get started raising money. So I created the 6P rule. And the 6 Ps are pretty simple. There's professionalism, there's pitch, there's practice, there's profile, there's platform, and the last and the most important is patience. Creating this business takes time. It doesn't start overnight. But these 6 Ps I've observed in every single successful entrepreneur. I've interviewed over 300 people on my podcast over 7 years. They all have the same 6 Ps. And it's all about, they do exactly the same thing regardless of what the business is. It could be real estate, but also could be creating like Tesla. And we're going to talk about some examples about how Elon Musk has created a brand around himself to raise more money and increase his profile. So the first one is professionalism. And I think everyone has to start here and has to realize that we are that person there. We actually are standing on a mountain of value. We actually don't realize that we're standing on a mountain of value, but we all got to start somewhere. No one is just born and comes out of the womb with 10 years worth of real estate experience and, hey, invest with me because I know exactly what I'm doing. I was sitting in your seat. I started from zero. But you have to understand that everyone has a story and everyone has a skill set that they can leverage to attract more capital. Because at the end of the day, you're a brand. People will invest with you first and foremost. The deal is actually second. They will trust you. My dad trusted me to invest with me because he trusted me to do the right thing when I asked for that first bit of capital. The same thing will happen with your friends and family when you ask for money to invest in a deal. They're investing in you because they trust you. We're going to talk about that, how we grow that and you attract more people. But at the beginning, you have to understand that professionalism, we all have professionalism. We all know how to rock up on time. We all know how to be punctual. We all know how to host meetings. You all have a skill set and a life journey that you need to look back on and say, I can draw upon these skills to help me start my business. For me, when I started, I had a structural engineering background. And I thought, you know what? I don't want to be an engineer anymore. I want to keep learning and being in the real estate space. So what did I do? I went off and got a job with a developer in LA to continue learning and growing my skill set. I needed a visa to stay in this country before I could go off and start my business. So what I did, I just pivoted out of engineering using a skill set into a job that I could continue to learn, continue to get paid, and continue to grow my business on the side. So professionalism is an extremely important element of getting started because no one here is just born with 10 years worth of experience. You are a key person. So when this Gantt chart is extremely important when you're starting out, is because when you're looking at, Christina was talking a lot about mission and values earlier. You have to start here to understand what your story is because you cannot assimilate with someone unless they know what your story is. My story is interesting that I came from Australia and moved here to chase a girl. That's my story. You all have a story. You just have to understand how to tease it out of you. And it comes from understanding why you exist and why people, will take notice of you. What's your vision? Why should we love you? These are the exact things that I want you guys to go home tonight and start to think about, because without that why, you won't be very crystal clear on how you go off and achieve and create an aura around you to attract capital. So the second P is, and again, I'm skipping over this really quickly because this is usually done in 8 hours, but it's compact into 40 minutes. So the second P is about pitching perfectly. The pitching perfectly is extremely important, and I'm going to talk about 3 different types of pitches when you are in different settings. And the first P is all about pitching. It's called your social pitch. And if I had the clicker, it would go quicker. But there's 3 types of pitches. There's a social pitch, there's a scheduled pitch, and there's a sales pitch. And each single one of them has a unique way of being used to help bring about your story when you're talking to an investor or you're talking to someone who wants to get to know you. And the big thing is, let's look at Martin Luther King, the I Have a Dream speech. Now, everyone knows it's an extremely iconic speech, but he said that 1,000 times, 100,000 times in the South around churches, and we have to think like that when we pitch. We have to think emotively. Now, obviously, we're not going to pitch as famously as the I Have a Dream speech, but there is a formula, and the formula that we've created, or I've created, is down the bottom, and I'll get back to this in a second. But ultimately, when we're pitching, you have to pitch. To pitch perfectly, it's not about the first pitch. You have to pitch 1,000 times over and over and over again, because that is how people get to know you. And so people get to know you through this formula at the bottom called name, same, claim to fame, goal, and a game. And so when you're pitching to someone, they don't want to have you ramble on for 10, 15 minutes to understand what you are, what you do. So, for example, my name is Reed Goossens. If I'm pitching to someone, they want to know really quickly what I do. My name is Reed Goossens, I'm a real estate investor. Boom, I'd instantly be able to put you in a box and say, that person is a real estate investor. They don't have to hear, if you're a doctor, they want to be able to put you into a certain box if you're pitching that you're a doctor. But in this case, we are an investor. My claim to fame is that I moved to America to chase a girl, and now she's my wife, right? My goal is to help 1,000 people achieve financial freedom, and I'm going to do that through multifamily syndication. Boom, instantly in 30 seconds, I've got a social pitch that is pitching a big game for people who want to be a part of it. The claim to fame part is all about things that you do in your life. It goes back to the vision, it goes back to the professionalism of what you are, what your story is. I had a client that had a claim to fame. He had sold something like 1,000 used BMWs over his career as a used car salesman. And so he used that in his pitch when he was pitching to people. And again, it's not necessarily about a good pitch, because no one's going to walk out of a room and go, you know what, that was a great pitch. They walk out of a room going, that was a great conversation. And a pitch is about a start of a great conversation, because that's going to lead you to your second P, so your second pitch. And this is a worksheet at home. So when you leave tonight, I want you to go home and practice this, your name, same, claim to fame, goal, and a game. But it will lead you into the third P, which will be about practice. And the practice is about getting in front of investors. Practice is about getting in front of investors. So this is going to your scheduled pitch. So when you're in a social setting like we are tonight, you're going to practice your social pitch. The name, claim, goal, your claim to fame, goal, and a game. You're going to practice it over and over again. And when someone pitches you correctly and they say, hey, I really like what you have to say, Ken, let's get out our phones, let's get a scheduled pitch on the calendar, and let's sit down and have a little bit more have a chat about what you do, because I'm interested about what you do. And this is where the third P comes in, about getting in front of your target audience. When you get out of that social setting and into a scheduled setting, over coffee, over drinks or whatever, you can then present to your actual pitch deck, which would be a business plan that would be laid out from front to back. So it's very simple of what you do, how you're going to go out and achieve what you're going to achieve, and sort of talk about the types of returns investors are going to have in that deal. But it's a one-on-one situation. Now, a scheduled pitch doesn't have to have a live deal. That's what's for a sales pitch, when you have a live deal and people bring up objections about why they want to invest in your deal. But a scheduled pitch is really important to help you practice. It's like at the batting cage, getting shots on the ball to keep you going over and over again. So practice is extremely important as it relates to the 6P rule. And so developing a credibility pitch deck is really important. This is how you sit down with investors. You've met them in a social setting. You've got them intrigued about what you're doing in investing in multifamily, or investing in fix and flips, or investing in self-storage or mobile home parks, or whatever it is. And now you're at a scheduled pitch, You need to present them a credibility pack. People like to see and hold things and have something to see about what you're doing. What's your business plan? And that's where the credibility pitch book comes in. It's a summary of what you want to go out and achieve. These two deals here, which you can't really see because of the lighting, but they're just example deals. They're not actually real deals, they're example deals of what the example returns would look like should you invest in a deal if I find this deal. And that's the question you want to be asking when you're getting in front of people. Hey, would this interest you? Would this be something that you would like to invest in? Should I present this as an opportunity for you? And having something tangible, showing someone, okay, these are the returns, this is the types of risks that we're looking at, and this is when you're going to get paid back. Answers all their questions in a nutshell so they can then say, I'm ready to invest in a deal with you next time you have a deal. So having these tools is extremely important to having a good successful schedule pitch. Now, once you have your investor or potential investor on your database, it's about the touches. It's about constantly keep touching them over and over again, meaning through digital, and we're going to get into the platform and the profile in a second here. Because people, when you need to raise your profile in your sphere, you will be Googled and people are going to start looking at you and seeing your online presence. Because you always need to be raising capital, and that's the power of a scheduled pitch. You always need to be talking to people in settings like this, taking it to a scheduled pitch, taking them into your investor database to then show them and keep following up again and again and again. It takes time, but it does work over, and that's how over and over, and I've been able to raise millions of dollars doing this with this formula. So once someone sees you, meets you, and says, you know what, I like what you have to say, but I'm going to Google you, because I'm going to Google, if you're not, Google is what they say you are, right? So if they go online and Google your name and you have a really bad profile online, then they're not going to be able to trust you as quickly as if someone who's got a really awesome website or really well thought out online profile. So put your hand up here who's got a website now. A couple of people, fantastic. So people can already go and Google you and say, great, I trust them. I can see what they do. I can understand their mission. I can understand their values. And I'm instantly drawn to them. So I've seen them in the pitch. We've used our Gantt chart of professionalism to help build the values and the mission and everything that's on your website that is this display of who you are. And they've met them in a social setting. We've gone for a scheduled coffee pitch. Now I'm Googling you to see what you do and what you're all about. And if you're not online, unfortunately, then you don't exist because people need to see you. You need to build that credibility quickly. So building an online profile isn't that difficult, but it is important to helping you build a brand. And there's many websites out there that you can go out and get professional headshots and build websites for you and all that sort of stuff. But it's important to have an online presence, because if you don't have an online presence, again, your credibility is gone out the window. So next, the fifth P we're going to talk about is about platform. And a platform is about what you build. And there's so many different digital ways of building platforms that are really, really powerful to keep helping you get those touches with those investors. I mentioned about 10 touches earlier. You constantly got to be keeping in front of them. So if you get on my website, we get on each other's email list and you don't hear from me for 6 months, and then you all of a sudden get an email saying, hey, invest in this deal, people will be like, whoa, I haven't heard from you in 6 months. Why would I invest in your deal? I don't trust you. I don't know what you're been up to. So developing a platform is important to keep those people engaged with what you do. A simple platform could be something like a newsletter, a monthly newsletter, keeping people engaged once you've got them on your database about what you've been up to. And again, that's super important to be able to develop the trust and transparency with investors to help them say, to get to a very easy yes when you do have a deal that you want to invest in. But there's so many other platforms out there. There's books, there's podcasts, there's articles, there's this room we're standing in today. The Pasadena Phoebe is a platform because Christina has built it over the last 11 years and people trust her, right? When Christina asks for someone to invest in her deal, how many people are going to say yes? Because she's developed a platform of trust and transparency through these same P's. So you have to ask yourself, what are you good at? What do you want to go build? Because there's a lot of different platforms out there. And the important thing is that these platforms are your digital asset. They are an extension of who you are, and they can be an evergreen product to continue to draw people back again and again and again. I have a podcast called Investing in the US. I've been doing that since 2014. I have over 350 episodes. You can go and listen to any of those episodes at any time that it's been listened to all the constantly when I'm asleep. It's an evergreen content. People get to hear my voice all the time. It's a type of platform. Now, I chose that platform because I did actually have a meetup group in downtown Los Angeles many, many years ago, but it was a lot of effort. I was actually getting more ears and listens through the podcast, so I decided to do podcasting. You have to decide what you want to do in terms of how you build that platform. There's two ends of the spectrum. There's creating a huge conference like Grant Cardone with hundreds of thousands of people coming along, or you could start very simply with just a basic monthly newsletter. And then there's everything in between, writing books, writing articles, podcasts, posts, you name it. But what you have to understand is that you need to be developing some sort of digital asset that helps people keep coming back to you again and again and again to view you as a KPI, a key person of influence in your sphere. Again, I use Christina as that she has developed this platform here that we're standing in today. We've all gathered here. We've driven across Los Angeles to come here tonight on a Thursday evening because you want to be around other people that you know have told you about this awesome platform of Phoebe. Talking about the Intelligent Investor Real Estate Conference. It's another platform that people go to. Again, Hunter Thompson has built that platform in order to bring like minds together to talk about real estate. So there's different elements of platforms. It's about what you resonate with when you want to build a platform. But it's extremely important to be building platforms all the time. So I'd love to know Oprah. I don't know Oprah. I think my wife would love to know her more than I would. But again, this is an example of how she's built over the years. If you just in this picture, you can think about back when she started. She started with the Oprah Winfrey Show. She now has her own TV network, her magazine. She's written 2 books. These are all elements of different platforms that are being molded. So from my podcast, I was able to create, after I think it was 50 or 60 episodes, the book, Investing in the US. That's another platform that I can use to keep people in front of me or keep myself relevant in people's minds. But again, I'm not trying to reinvent the wheel here. Other people have successfully done it, and you're just trying to emulate what other people have done. So again, when you're thinking about the platform, what are you good at? I remember I started writing blogs on my website, and I just was really bad at writing. So I decided that I needed to get into more of the audio space because I really like talking. Some people like visuals. Videos are really tough to do because you've got to always look good. Sometimes with audio, you can just turn on the mic and just start talking. But there's also people who are really good at writing. What are you comfortable with? And whatever you choose to do, you have to stick with it. Choose something that is consistent. Again, I keep talking about Christina. She has this consistently every single month. My podcast comes out once a week. It's consistent. People need to see consistency. Through consistency, they'll be able to build trust. Through that trust, you'll be able to ask them to invest in your deals. And that's the point of building these platforms. Because back in the day, we didn't have technology to leverage iTunes or SoundCloud or YouTube or Meetup.com or whatever it might be. We learnt as human beings to interact as a community. And through community, people were able to say, oh, you need to go and talk to so-and-so. What platform building does is get to know me over a shorter period of time. So through podcasting and YouTube and books, I can tell my story, again, back from the professionalism P, in a shorter period of time, and people can resonate with me. They may choose to do business with me or not, but people who do choose to do business with me are attracted because of my story. Again, very similar to some of the people we've seen online. So choose what you're comfortable with when you are building up your platform. So a basic one is, monthly newsletters. They're very simple. They're just what's happening, education recommendations. You could literally just put out links to some articles that you are reading in and around real estate. Something that is going to keep you relevant to your database, because the time will come when you need to ask them for capital for a particular deal, because you are that business owner who's out there looking for incredible deals over and over again. Again, these are the platforms that I built. So Investing in the US helped me build the first book, which helped me build the second book. And I've been able to leverage YouTube and Amazon and iTunes. And again, I started as being out as an engineer. I had no idea that creating this podcast would open so many doors. I don't make any money off this podcast, but it enables me to interview some of the best minds in the country about real estate, and that opens doors for me to ask them to invest in my deals. Again, I didn't learn this. It's a tried and true method. So leveraging these digital assets is really, really important, and they're evergreen. People are probably listening to my podcast right now, and I'm not there. And that's why I decided not to get away from in-person events, because it was a lot more difficult. And then the last P is probably the most important P of them all, and that's patience. And patience is tough to build because it takes consistency, and consistency is back to what we were talking about earlier. When someone is consistent at something and do it for a long period of time, they have the patience to have the long-term goals in mind that they want to build something of value. So where do you start? Well, you're already doing the first thing, which is you're coming to a networking event right now. You're at your first networking event, but I challenge you to go to 3 or 4 networking events a month if you can. And and do that for a 6-month period. And I bet you within 6 months, you'll be able to have grown your investor database. You'll be able to use the pitches, the social pitch, the schedule pitch, the sales pitch to help start a database. From there, you can start emailing them a monthly newsletter. If you choose to start a platform, that's fantastic. You don't have to, but if you choose to, what's that platform going to look like? Does it start with a blog? Or does it start with a bit of a podcast or be interviewed about your story somewhere else and you can share it with your tribe? These are all things that you can start to do very, very simply, and over a period of time, you can build up a big, big database of people who want to invest with you because they like your story. And at the end of the day, it will take time, but consistency is key. And you need to obviously check in with your database once a month. I try to do it twice a month, but again, to go back to the podcast and all that sort of stuff. But credibility does take time to build an incredible database, which you can then go and turn that spigot off and on. When I do have a live deal, I email my database once a month or a couple of times a month with what I'm doing. Every now and then I'll drip in my deal saying, hey, there's a deal coming, and people get excited about that. When's the next deal coming? I'm really excited, I've got money to spend. And when I do have a deal, I can get it funded pretty quickly within a period of 72 hours to a week. I usually can have a couple of $1 million raised. Again, I'm not saying that to boast, it's saying it through building really simple steps and trying to lay it out here for you in a 6P formula. That is a way that you guys can also go start building your database of investors to then grow your empire, your real estate empire. So with that being said, we are coming up to just over 30 minutes. I actually did it a little quicker. I've got a wealth building exercise here for people at home. What events are you going to go to? How are you changing your mindset? What are you going to do? What's your social pitch look like? Your name, same, claim to fame, goal in a game. How are you going to start going out and getting those scheduled pitches in front of investors? What does your credibility database look like, credibility pack look like in terms of a sample deal or a sample business plan? And then how are you going to go out and execute that over the next 6 months? What events are you going to go to? How are you going to meet people? How are you going to build that momentum? And so for everyone at home, if you have any questions, please let me know. But ultimately, there's some resources here. Again, you can get in the book, my chapter is written on the 6P rule. I go into more detail on that. You can check out my website at reedgoossens.com, and there's obviously the free podcast. And honestly, I try to make myself available to everyone who wants to chat about real estate. That's what I love talking about. This is only a 40-minute presentation because I want to answer any questions about what I presented tonight. And for those people at home who didn't get to hear all of it, if you have any more questions, please follow up with at my website. There's also an email at info@reedgoossens.com. And there it is there, info@reedgoossens.com. And ultimately, congratulations, you're a 6P certified in syndications, and you can start going and raising capital. So I hope that's been helpful for everyone, and just to give you a little bit of a snapshot in what we do. Again, I usually do this course over about an 8-hour period. So each P takes about an hour, hour and a half when we do it on a full day. So try to cram it in really quickly. But any questions for while we've got a little bit of time?
Same with online. If you guys have questions online, feel free to ask them out. We should be able to hear you.
So how many deals did you do before you got involved in syndications, and what type of deals are those?
Yeah, so I did, if I go back to my first syndication, or involved in a syndication, was after I did that flip deal in Philadelphia. So I didn't have a lot of massive experience when I started getting involved in syndications. The reason I got involved in syndications in the first place was I knew I needed to go bigger and better, and I was getting to the end of my tether in terms of I only had amassed a small portfolio of cheap properties. The bank wasn't lending to me that much, and so I needed to go out and build that brand. And the brand I started to build was through my story of, okay, I'm Reed Goossens, I've come to this country, I'm Reed Goossens, I've got this weird story about learning about what an EIN number is and an LLC and how to get bank account, how to get a credit scores and credit cards. Maybe I should start talking to other investors here in the US about the benefits of investing here. Someone might find that interesting, and that's where I started the podcast, and through that I was able to start a database to raise capital to then go do my first, or contribute to a syndication in the beginning. That first syndication I didn't do by myself. I had many other people involved, but I was able to raise a bit of money out of that. I still remember my first syndication. I had to raise $500,000, and I think I had 50 people on my email list at the time. And I'm like, I'm going to crush this. This deal, I'm going to freaking crush it. I launch it to everyone, and I hear absolute crickets. And it was because I didn't do enough of the prepping them, of the educating them, of what a syndication is, what do the PPM look like, what do the legal documentations look like. So when I got to the ask, everyone went silent. But I was able to get out of those 50 social pitches, I got 3 people to sit down where I could show them the credibility book, and those 3 people went to the sales pitch where I pitched them the deal, and only 2 people invested. But it really goes back to that this was back in the day, I wasn't doing enough as a business to educate my audience about what I was doing. Those touches that I talk about, those consistency of monthly newsletters and trying to educate people about what I do, really was solidified in that first deal because I wasn't doing enough to, warm the oven, so to speak. So does that answer the question?
Yep.
And what do you suggest, like, for your first pitch, not having any experience in your portfolio? Something on your own first with your own money, and then.
I personally would do that. Yes, I did it on my own first. I remember going to meet up events. Like I did those first couple of little deals, one in Syracuse, a flip, to prove it to myself, right? I still remember the thought process of, okay, I've got this $40,000 in the bank that I've saved. I'm going to go buy this triplex, and the thought went through my head of, if this deal goes bad and I lose it all, it's my money. It's no one else's money, and I was okay with that. And so I do think when you're getting started, starting small is good, but you can start small in other ways as well. You can find people in this room that might have a fix and flip, or something that's a little bit more tangible that your partner's on, that you get experience on a deal that way as well. I wouldn't jump to 300 units at once.
So to add to that, going from doing your own deal to now, this is your first syndication, and you're trying to get money from people. How did you handle all the contracts and the legality of things, and then because it must have been a new learning experience.
That's right. Yeah.
And so how did you there was so much from lending from a bank or your father in the first case too. How did you come about learning about all the things, doing contracts with all these investors?
Yeah. So again, that's also through the education that I had to learn and go through when I was getting mentored back in the day. I did have a mentor that was coaching me through all the steps, but ultimately, the contracts and getting investors signed up, that's really the consistent part. Whether you invest in my deal or Henry's deal or one of the other people's deals, they're going to have the same contractual agreements, the same PPMs, the same limited partnership agreements. So really, as you're warming up investors, so once you get to that scheduled pitch, right, and you're sitting down and say, I'm going to go buy a 20-unit property, it's going to look like this. By the way, these are the types of documents you'd be signing if you ended up partnering with me. Here's an example of a PPM. If you don't know what a PPM, take this one home and read it and get to know it. So through that scheduled pitch, you get to bring up all these things, these educational topics that people are going to have questions about, right? Because they will have questions, like you're saying, what's legally binding me to this deal? How do I know that I've invested $100,000 in this deal? How do I know I own $100,000 worth of this deal? Well, that's through the legal documentation, and that's through you as a sponsor educating your investors about the process. Does that make sense?
Yeah.
So
Because if you don't do that, it's going to stop them from saying yes.
that's right. If you don't have the answer, right, then it's going to look a little bit bad on yourself to be say, well, I don't. Like it's okay to not sometimes have the answer, but if you don't have a pretty clear idea of the steps to bring an investor on board, you need to sort of have that down pat before you go start talking to investors. And in the day-long course, I go through exactly an example PPM. What does that look like? And the, you know, why would I need to sign a PPM? And what legally, why is it legally there? Why does the SEC require it? Like all this sort of stuff. This is what you need to be educating your investors for and having conversations about. Because the conversation of the water cooler will start with like, I'm investing in real estate and this is what I'm doing, this is all, and they want to look at the returns, they want to look at the numbers, but you also got to look at this more boring stuff of like, well, how do we legally protect ourselves? So, yeah.
You mentioned you got a job as a developer.
Yep.
In LA.
Yep.
Did you leave your job,
Yep.
your day job to do that?
No, it was the highest paying corporate job I could switch into real estate. So I was still getting paid, it was still a W-2, but I was learning on the job because I had a skill set that they found attractive. So that was going back to that professionalism where I was saying we all have a skill set. We may be good with numbers, we may be good with building websites, we may be good at, you know, engineering in my case. I reached out to someone who I aspired to be and say, hey, can I fill a hole in your business and still get paid for it at the same time, and I can still get to learn, and that's what I did.
How did you find them?
The structural engineering firm that I was working for was the engineer on one of their developments. So it was just very much like, look at this guy's email. Hey, Mr. So-and-so, I'm Australian, like I don't want to be in engineering anymore. Is there a job that I could come and talk to you about? And they, over a period of about 2 or 3 months, we got to know each other, and yeah. So I implore people, if you do have a skill set that you could use in real estate to continue to learn, that is how it's a great way of pivoting and upscaling yourself over time. So,
At what point do you need to start like researching, worrying about like SEC regulations regarding raising money and things like that?
Oh, I think you need to be aware of that from day one. And again, in this longer format of this version, we go through what a PPM is and the exact legalities of a syndication and why you need to be, you know, the difference between an accredited investor and a non-accredited investor, the difference between a 506B and a 506C, what you can and can't do. Again, I'm not an attorney, but those steps are pretty, there's no gray area. It's pretty black and white. You've got to either follow the rules or you don't follow the rules. So once you learn that, and again, if you are interested in looking at an example PPM, I'm more than happy to share one with you. If you email me, it's very straightforward. But the thing is, whether your investors invest with you or with me or with someone else, they're going to have the same, you know, legal documentations required in any syndication. So, yeah. Question?
The people that you're looking for investing, you have to have a certain net worth.
Yes. Yep. So just quickly on, and again, more slides that I cut out. So there's accredited investors and non-accredited investors, right? Accredited investors is set, there's a regulation set by the SEC, the Security Exchange Commission, that when you're selling a security to an investor, they need to meet a certain threshold of understanding, sophistication. The SEC chose a level of income or level of net worth to justify whether you're accredited or unaccredited. And that number, I think, is $250,000. Don't correct me if I'm wrong. It's something. So if you earn $250,000 or more a year, or worth $1 million or more, you're an accredited investor. If you don't meet those requirements, you're called a sophisticator or unaccredited investor. Now, depending on how you raise your money, one is called 506B and one is called 506C. 506B can allow non-accredited investors, but you cannot solicit. You can't advertise on Facebook or Instagram or anything. 506C is only for accredited investors, but you can actively solicit without being a lawyer. That's the sort of the differences between the two. Does that answer that question? Yep. Okay. Any other questions, guys? You're going to go off and raise a bunch of money now and create a brands and just, you know, next Tim Ferriss and, you know, Oprah Winfrey in the room here, so surely, right?
What comes first, raising money or the deal?
So, very good question. What I'm talking about here is raising money. What I'm talking about is building a brand around you and talking about that through building an investor database. I didn't have an active deal when I first started the podcast, but my goal was to get as many people interested in my story to understand that they could also invest here in the United States. And that's why I'm talking about your vision and your brand and your goals, because when you build a business around you as an individual, a key person of influence, the people in your phone are going to trust and like you more than they're going to trust and like me, because they don't know who the hell I am. They know who you are. And so talking about what you do, having a website, putting yourself out there as a professional, and then talking about them through different mediums like your monthly newsletter or a podcast or a blog helps build rapport. And again, goes back to those touches that I'm talking about. As you keep touching investors all the time, they start to understand, hey, this person knows what they're talking about. I remember when I first got started, I was a structural engineer and I started talking about real estate. Everyone's like, what the hell, aren't you an engineer? So it's about changing people's perception of what you are, and it's through different mediums that I describe the 6P formula more about. So to answer your question in a little easier, shorter way, yes, focus on the equity, but that's through building a brand around you. There was a question online, I think. Maybe not.
Actually, Carla has a question. I was going to ask your question, but I think she's going to ask it.
Okay.
I was just chatting with Patrick, saying hi there, by the way.
Hey.
I don't see myself doing this, asking for other people's money to invest. I see more of the short-term rentals, getting properties that generate, $500 to $800 a night in the short-term rental market. Just wondering about that idea and doing it on my own with my own money.
Look, if I was sitting on a mountain of cash as well, I wouldn't do syndications, but I'm not, and I have a net worth number in my head that I want to go and achieve. So my idea of OPM is I'd rather have a little bit of a lot than a lot of nothing. And again, for me, when I started out with literally zero, it's about building my war chest of capital so I can go off and ultimately I'll buy a 200 unit deal by myself with my own money. That's the ultimate goal. But to get to that point, I needed to raise money from other investors, pull that together, go off and do 10, 12, 13. I think I've done 16 syndications since I've started in order to build my war chest for my personal wealth. Does that answer that question? But the rule that I'm talking about in terms of the 6P rule can apply to you in building your business and building you as a brand. It doesn't have to be about that your end goal is raising capital. It could be about your end goal is getting more awareness about what you do as an authority in your space. So it doesn't necessarily mean the ask is all about equity. The ask could be about just you want to be an authority in the space of short-term rentals, and people get to know who you are and get to be asked on stage to speak about your expertise of short-term rentals. The 6P formula will still be applicable. So, yeah.
Thank you.
I have a question regarding syndication. If you're putting the deal together,
Yep.
and you're getting investors to participate in the deal, they would probably feel comfortable if you're putting some of your own money in the deal.
Correct.
But you're the one doing a lot of the work. Is it commonly done, let's say there's 4 investors plus yourself, and you put down 10%, and they put down 20%, but you earn the other 10% for putting it all together?
Yes. Yeah. So as a structure on a big, large syndication, so let's just take a 100-unit deal, and this is just what I'm used to when I offer to my investors. So I will raise the down payment from my investors. So typically 25 to 30% of the purchase price is raised from investors. Those investors will own 70% of that 100 units. Me and my partners, for finding the deal, putting it together, putting down the earnest money, going qualifying for the debt, all these things that take time, we get 30% of that deal. So yes, sometimes we have our own money in the deal, but sometimes we don't, right? But we also don't get the deal over the line if we don't having liquidity. I've got to qualify for the loan myself. I've got to have a net worth. I've got to have liquidity. I've also got to go chase the deal. So in today's environment, it's not uncommon if I'm chasing a 100-unit deal in Phoenix to put down $1 million hard day one. well, that money's coming from me, right? So I need that money back to go do deal number 2, but if I lose the deal or something's wrong with the deal, that's my risk. So sometimes I do have money in the deal. Sometimes I need to be liquid for qualifying for the banks and or chasing more deals. Does that make sense?
It makes sense because they need to be comfortable with you.
Right. Well, if I've got $1 million hard of my own money, I think it's pretty I'm taking this deal pretty freaking seriously. Now, I didn't start out like that. I had to take personal loans against to get those first couple of deals done, but back in the day, hard money wasn't as required as it is today. So, yeah.
All right, let's give Reed a hand.
Thank you.